Welcome everybody to the set of the Building Equity Podcast. My name is James Schlimmer, Chief Executive Officer of Equity Real Estate Services, and my head is spinning from Federal Reserve Chairman Powell in his speech today at Jackson Hole just this morning. There's no question that the Fed is committed to fight inflation. Now, number one, please click subscribe. Please follow our YouTube channel. Our goal here is to create content for real estate investors to help you guys just do what you do better. But I want to be able to bring you some amazing data, and I want to talk about some of the terminology that Powell used today. Should let everybody know that at all costs, the Fed is going to fight inflation. So number one, let me just do a slight disclaimer here. This is purely for educational purposes. We're not giving any financial advice, and we got to give our disclaimers. So that's what we got here. I also got a bundle if you want to see behind the scenes on how we do this. We got that view too for you. But let's get serious. So what happened today? What did Fed Powell say? Number one, he used the word unconditional approach. And I know Joseph Wang has used this in the past, who's a great investor out there and a great economist. But they will use an unconditional approach to try to get inflation down back to 2%. Price stability is key. They understand it's going to take some time, and they recognize there could be sustained negative growth. Sustained negative growth, that's a great way to say that we understand there's going to be a recession, and we're still going to stay the course, right? They understand there could be take a look at this, softening of the labor market. Softening of the labor market, unemployment numbers are going to go up, right? So if you think about that, the economy is being held together. They're actually redefining the term recession based on the fact that the unemployment numbers are so low. Well, get ready because more than likely that's going to change. He recognizes too that the U.S. economy is clearly slowing. A 1 month decrease that we saw last month in inflation, it's not enough for them to waver off course. So they're going to continue that journey. Again, they recognize sustained negative growth, which means recession, softening of the labor market. He recognizes the U.S. economy is slowing, right? Those are his words out of his mouth. We should expect, they use the term, an unusually large increase. Now, he didn't say in September, but common sense says in September, when the Fed meets, there's going to be probably another 50 bips, 75 basis point increase to fight this inflation. He used the term that it is clearly the market is out of balance. High inflation has spread throughout the economy. And he also went so far as to say, too, that I think is interesting, they intend to take a restrictive policy for quite some time at all costs. He believes the Fed has three roles. The central bank can and should do what they need to do to combat inflation, and they will. I'd love to hear what Jeffrey Snyder has to say about that too, by the way, but regardless. Number two, the public perception about inflation feeds inflation, and it's the Fed's responsibility to gain trust, have the public trust them, and that public sentiment is key in fighting inflation. And number three, they're going to keep at it until the job is done at the expense of a recession and increased unemployment. So what does that mean really for real estate investors? There's a couple metrics. I want you guys to head over to IRA Title Pro, visit our data center. I'm going to show you, it's up on the screen right now. And when you come over to the data center, take a look at the resources. We have aggregated all the key data and metrics for real estate investors. So we're actually getting our data from the Fed, the Federal Reserve Economic Division. If we hop right into existing home sales, which is getting its data from NAR, let's take a look, guys. You can see the cliff here of existing sales. January of 2022, this peak right here, there was 6.49 year over year homes sold. Normally that's about 5.2, 5.1 regardless. You can see down in July, we were down to 4.8. That is a negative 25%, negative 25% decrease in home sales year to date. And based on what we just heard, you can expect this trend to continue more than likely, right? Okay, so if we head back over here, you could take a look. When interest rates increase, and we'll talk about the 30-year fixed interest rate, you can expect the price of homes to decrease. So if you look here, we started January of 2022, median sale price of a home, Again, this is from National Association of Realtors, $354,300. That went right up to a peak in June of about $413,000. That was the peak, folks. And again, here in July, you can see we're down to 403. So from January to June, we saw 16.6% increase. But in that 1 month from June to July, we saw a negative 2.41% decrease. And you can expect this trend to continue. When the Fed raises interest rates again, mortgage rates are going to go up, which we're going to look at next. Less people can afford a home, home prices have to come down, right? But when less people can afford a home, that's a good thing for real estate investors because more people need to rent. Nature of the beast. All right, let's head on over here. Continuing in the IRA Title Pro data center. And if we look at the interest rates that we have here, and I'm going to come over here real quick, you can see that we are, and let me just zoom in here. By the way, here's a little trick. You guys can toggle in on this to get the dates to look the way that you want. We started January 6th of 2022, which is going to be right over here at 3.22%. Everybody knows interest rates dramatically increased. In June, we were up at 5.81%. August, we fell back down to about 4.9%, 4.99. As of yesterday, we were at 5.55%. And again, if you think about this, right? They literally just said, the Fed chair just said today that they will be unwavered in their approach to fight inflation. You can expect these interest rates to increase. Nature of the beast, right? That's what's going to happen. So head back over here, you can take a look. There's a couple other things on the data center that you should take a look at. Number one, home affordability index. Again, the home prices increase to all-time highs. It's less likely that people can afford a home. Common sense. But I want to scroll down here to very quickly. We're going. I want this to be a quick video for you guys. Housing permit pulls have decreased, which is our new construction numbers. And again, when you look at the housing starts, and I'm going to just bring this in here, you can see that in July, the housing starts kind of fell off a cliff. And we started with a peak, I say a peak, in December of 2020. If we come back to right about here, there was about 1,308 was the number. In July of 2022, we were down to about 916. And if you think about from February here of 2022 to July of this year, which you're talking about 5 months, we've seen a decrease of 24%, 24.4% decrease in housing starts. What does that mean, new construction? That means people are getting under contract. There's a permit that's pulled. And then those builders are lowering the price on other homes in that community, and those buyers are saying, I'll walk away, which is very interesting, right? But again, when interest rates go up, the price of a mortgage becomes less affordable, which means more folks have to rent, which is good for real estate investors. So the build for rent space, for our folks that are long-term, have long-term tenants, or looking to even do short-term rentals. The rental market is still going to be unbelievably on fire right now, and it's just the nature of the beast. So again, that's all the info I have for you. I'm still kind of rattled by what today was. Amazing, not an amazing day. This is actually, it's bad news overall for the economy because more than likely we will be officially in a recession. Unemployment numbers are going to go up. This is just what it is. And here at Equity Real Estate Services and IRA Title Pro, we want real estate investors to be able to have this information as quick as possible and head over to the data center at IRA Title Pro. My Twitter handle is James P. Schlimmer. Follow me if you'd like. But the goal here is that we want to be able to produce content for you guys to help you guys invest, help you guys do your job. I hope this helped, and I look forward to speaking with you soon.